For individuals age 65 and older, there is a new tax deduction that's going to be available starting in 2025, coming out of the passing of this big, beautiful tax bill. So it's a $6,000 additional standard deduction over and above the normal limits. But in this video, we're going to be going over how that coordinates with the standard deduction, their income phase outs. That once people make too much, they will start to phase out of that special $6,000 deduction, as well as tax strategies that retirees might implement knowing this new deduction is available. Hello everyone, I'm Michael Ruger. I am the managing partner of Greenbush Financial Group. Today we're going to be covering this new senior $6,000 tax deduction that's going to be available starting in 2025, and it's going to last until 2028. After 2028, this is set to sunset, but it's important to understand you have a standard deduction. There was already a small enhanced age 65 tax deduction, and then this is going to go up on top of that. Prior to the passing of this new big, beautiful tax bill, there was already an enhanced age 65 deduction that was in place for 2025. So for anyone that was a single filer, it was $2,000 over the standard deduction. For married filing joint, each spouse that was 65 or older got $1,600 each. Now, depending on your filing status, so single filers are entitled to the $6,000 if they're age 65 or older. For married filing joint, if one of the spouses are 65 or older, you get $6,000. But if both spouses are 65 or older, then it's a double, it's $12,000. This deduction was really meant to take the place that when Trump was campaigning on tax-free Social Security, that did not make it into the big, beautiful tax bill, but in its place, he offered this tax deduction for individuals age 65 and older. However, in order to qualify for this new deduction, there are income thresholds that once someone makes over a certain amount, they begin to phase out of that $6,000 to a point once the income is high enough, they completely phase out. So here's what the table looks like. So if you're a single filer, the phase out begins at $75,000 of modified AGI, and it fully phases out at $175,000. If you're married filing joint, the phase out begins at $150,000 of modified AGI, and it fully phases out at $250,000. If your income is somewhere within that phase out range, the way it works is for every $1 you're over the threshold, they subtract 6 cents for the tax deduction. So essentially, the way the easy math works is if your income's over those threshold amounts, times it by 6%, and that's how much it reduces from your $6,000 max age 65 tax deduction. Here's an example. Let's say we have a single filer with a modified AGI of $100,000 in 2025. That essentially places them $25,000 over the $75,000 phase out threshold. So we multiply the $25,000 by 6%, and that equals a $1,500 reduction. So $6,000 is the maximum deduction. Subtract out the $1,500, so this person would be allowed to take a $4,500 deduction. For retirees that are going to be right near those income thresholds, they might want to do some advanced tax planning, like be careful about taking large distributions out of traditional IRA accounts, or if they're doing Roth conversions, they might want to do Roth conversions that are not jeopardizing this additional tax deduction, or if they want to increase deductions. So maybe they're in RMD mode, which is forcing them to realize income. They might be able to do qualified charitable distributions to essentially reduce the tax impact of those RMDs that are coming out of those taxable retirement accounts. The other benefit of this new tax deduction is you do not have to itemize in order to capture the new $6,000 age 65 tax deduction. You can take the standard deduction, which many retirees do, and still capture the additional $6,000 as long as your income is below those thresholds we just discussed. This is one of many changes that this big, beautiful tax bill made to the tax code that could affect retirees in years 2025 going forward. I will put a link to our other videos that cover the other tax law changes in the description of this video below. Thank you for watching.